Very good afternoon, everyone, and welcome to today's uLaw webinar. The title or topic for today's webinar is Law Society Bookkeeping Compliance. Now, today's webinar has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, New Brunswick, and British Columbia. And we're hoping within the next few weeks that these webinars that we conduct with CPDs will be accredited in the province of Saskatchewan as well. So we are in the process of getting them certified. But for now, it's going to be for the provinces of Ontario, British Columbia, and New Brunswick. So the title that you would use when you log into your Law Society portals would be Law Society Bookkeeping Compliance. Okay. As always, kindly use the chat windows to ask any questions that you may have pertaining to today's webinar. And if you need a better quality with your audio, we've also provided certain phone numbers that you can dial into as well. Okay, so let's get right into it. Like every other uLaw webinar, today's webinar has this very specific agenda that we have for you. We're going to specifically focus on the important bookkeeping compliance needs in terms of the documents that are expected by the Law Society auditors, starting with your trust and general ledgers, why you should maintain them, how long does it take for you to maintain them today, and the opportunities that you have to help improve efficiencies to make it easier and more effective and more qualitative, for lack of a better term, for you to do it going forward. We'll certainly talk about the reconciliation process, what it entails to reconcile your trust account, why you should also look at reconciling your general account, and how can you simplify that process further. And once you've taken care of your trust general ledgers, your reconciliation to begin with, in fact, then we look at the journals, which are important documents, kind of give you a different perspective of a data set compared to ledgers, and some jurisdictional documents such as Form 9A, and some additional documents like the fee book and deposit slip, which are all important elements of your readiness towards an audit, and some of the important bookkeeping compliance documents that are expected from you if and when you're being asked for in an audit. And of course, at the end of all of this, if you're looking for better effective ways of managing it depending on your situation, we encourage you to explore any legal accounting software of your choice by doing your market research, because we believe those are purpose-built tools to help you handle and manage all of these needs in a regulated, meaningful fashion. Okay, so we typically start most of our reconciliation webinars with this particular slide, and all we're looking to highlight is to kind of just give you a backdrop of how legal accounting systems have evolved, how legal practitioners have evolved the use of the tools that they had at that particular point in time when the rules of the game are slowly evolving but haven't changed a lot. The ledgers, journals, maybe the data sets within them have changed, been added, removed. The overall need for such a system hasn't changed in a pretty long time. So starting with a very simple yet, I would say, time-consuming manual double entry system, we've kind of evolved to a point today where we have cloud-based legal accounting software that you can pretty much log into from wherever you are in the world. Has very secure, highly compliant, purpose-built and designed for managing trust accounting, which is a very important financial vehicle in your legal business, ensuring automatic ledgering, and also gives you the ability to deliver on important financial reports at just a click of a button. So we've really evolved from you having to spend a lot of time and effort to create these documents to a point where you can create them when you need them, from wherever you need them, click of a button. But the responsibility of you having to enter information hasn't changed yet. I think we're getting to a point where slowly, maybe in the next 5 to 10 years, you're going to have AI and machine learning kind of helping you automate those components as well. Maybe a machine learning system would read right through what you do day in, day out. Maybe you can talk to it, let that system know that you've done a certain docket, and eventually get to a point where many of these tasks, especially the repetitive tasks, can be automated in completeness. But till we get then, we've kind of evolved to a maturity today where the use of legal accounting software and the right use of it, training yourself to enter the data in time, is going to give you the resultant documents that are needed from a bookkeeping compliance perspective. But having said that, whether you use a manual system today, which I'm sure if you are comfortable using, there's no harm in that, or if you're looking towards a legal accounting system, we're going to primarily highlight the importance of the documents that are being requested and how you can create these documents or manage these documents no matter what system you use. So we first of all start with the ledger, but a quick caveat at that is letting you know that a reconciliation process, which we'll get to in a second, forms almost the basis, allows you to write the certain numbers for a particular time period, write those numbers in stone really through that reconciliation process, ensuring that the numbers you reflect in these reports are prudent and something that you can stand by. Okay? So we'll look at some of the templates that these ledgers and journals request information to be shared, and then we'll certainly look at the reconciliation process and how that really forms the basis or the crux of these reports. We first start with the ledgers, and what we hope that you can take away from today's webinar and understanding these documents is these documents are reports that are telling a story. Now you're telling the story to the auditors, to the important individuals that are looking to audit your documents, and they're looking to learn from these documents that story about the financial health of your business, especially about how you've managed or trust funds, how you've managed general funds, and that's why the word trust in general. Now, if your firm does not deal with trust money, then of course you don't have to deliver on the trust ledgers. Sometimes it's recommended that if you're still having a trust financial vehicle, but you just haven't used it or at all, then sometimes it helps to provide what's called a zero trust reconciliation document. But if you don't have the trust vehicle at all, then you don't have to worry about that. And we'll start with the storytelling that the ledgers talk about. What are the important components of that story? You know, typically in a movie you may have, you know, a protagonist, an antagonist, a certain theme, maybe good over evil, things of that nature. So the underlying theme of a ledger document is to be able to showcase the financial transactions that have entered your financial vehicle. If it's a trust account, when we talk about the trust, the financial transactions that have entered. And the important elements of that financial transaction that are captured in the storytelling of the ledger are when this happened. What was the reason for this transaction, or what was the transaction? It can't be just a random transaction. It has to be purposeful, meaningful, because especially in the world of trust. How much was received? Or how much was spent? And the last important data element or part of the storytelling is on a particular time and date. I wouldn't even go far as time. On a particular date, what is the balance left in that financial vehicle? So you started at zero, maybe when you first started your business, and over a period of time you've accumulated through retainers or other forms of money coming into the trust account and money leaving the trust account for disbursements, for other payouts from trust. And in all these transactions, you're able to capture them within a time capsule, within a particular date range of all the transactions that have come in, that are left, and what balance they've left behind. Now that's the storytelling through a typical client's trust ledger. And what's important is these trust ledgers are generated over a time period, and hence that same story needs to be repeated for every client that you've had in that time period. So if you've had 8 different clients, then we talk about the trust balance and the trust ledger for all those 8 different clients. The general ledger, pretty much the same storyline. You have when it happened, what was the reason for it, but an interesting twist to the whole general ledger story is that some added elements around tax. Depending on the province that you're doing business in, you may have a harmonized tax, you may have specific provincial taxes, GST, PST, right? And hence, in the general ledger story, you're also including how the total amount that is entered into the system is further subdivided for fees with taxes, but also finally letting you know what the balance on that account is. So in trust, you don't have the component of taxes, whereas in the general ledger, you do include the component of tax if and when applicable, right? So if you've not charged your customer tax again, that remains to be 0. If you've paid for disbursements from general, you may have paid taxes, in which case you report them. If you've not paid taxes, then again, that column remains to be 0. Okay, so this is as simple as it gets. So if you're doing this in a manual way today, all you have to do is ensure that you have this specific template available to be repurposed on a monthly basis at a minimum to generate the storytelling through these documents. So the trust ledger for January, general ledger for January as well. Okay. Okay. Then we look at journals. So we had 2 documents, the trust and general ledger. Now we're moving into the journals. Now the journals, again, are a different set of reports, but provide different aspect of that storytelling with some additional interesting information in them, which were not available in the ledger document. Okay? And again, you will have a journal document for both trust and general, similar to ledgers. But what are some of the added elements that you capture in a journal document? The date remains to be the same. So again, when did that financial transaction enter into the system or occur? And added information in journals that we did not see in the ledger was, who did you receive this money from? Especially if money is coming into your financial vehicle, someone must have paid for it. Typically, if it's a retainer, it's your customer or someone on behalf of your customer who's paid it. And hence, ideally, they are the source of the fund. And hence, you add their name in the receipt fund. The purpose remains to be the same. We had that in our ledger as well. So what was the reason behind this payment? Now, the purpose has 2 purposes, for lack of pun there. The first purpose is for your own internal consumption. So when you're reconciling, when you're looking to balance these transactions and understand why did that transaction happen to begin with, these purpose fields are going to help explain to you further that this payment came through because of a retainer that you received for this particular family matter file, and file number probably. So it gives you more context to what that transaction was about, which is something that you would miss when you're looking at a bank statement. Not all bank statements really go the extra mile to tell you the descriptive nature of why the transaction exists. Many of the bank statements are just going to tell you, here's how much funds came in at this particular time, and they would kind of give you a random alphanumerical number. Right? Same thing with going with expenses, money leaving. The purpose gives information or descriptive information of why you've spent that money. First is clarity. Second, ease of reconciliation. So two reasons why we highly encourage that you use the purpose of funds as a way to capture why it happened. Then within a journal you have the amount, which is very similar to the ledger, because the ledger has the amount as well. But a final data element that's added in the journal is the auditor wanting to know what was the method of payment for this particular transaction. So in the ledger, we know that a particular transaction came in on a certain date, and this was the reason for it, and this was the amount. Whereas in the journal, we're adding two additional columns. One is the source of fund, who did this come from, and a final, which is the method, which is how did they pay for it. And one of the important reasons of understanding the method is, again, during time of reconciliation, if there are any errors while reconciling, or maybe you did not deposit a particular form of transaction, or a particular form of transaction has not yet left your bank account when you had assumed that it would have. These are important situations that arise while you reconcile. And in generating a journal document, you're now able to go back in time and understand how that transaction was paid for. And if you understand that it was made through a check, maybe you can look through your drawer, look through your check leaflet, or understand which check did you actually submit to a vendor or someone else, and look if that money has been transacted yet or not. So the method becomes very critical, again, as an introspective way during reconciliation. So that we talk about the trust receipt journal, all money coming in. Okay. Likewise, you have a trust disbursement journal where money is leaving the trust account. So very similar to the trust receipt journal, you have the date of when this money left. What was the method? So how did you pay for it? Because it's leaving your trust account. Who was this paid to? So in the receipt journal, you had where did this come from? In the disbursements journal, who was this paid to? Very similar to the receipt, you also have the purpose of payment. What did you pay this for? Maybe it was a refund of a retainer. Maybe it was a trust disbursement. Maybe it was a payout for trust for some real estate transactions where you're writing a check to the third party. And then the last was the amount. Okay? So hopefully the two journals are clear from a trust perspective. There's a trust receipt journal and a trust disbursements journal. Money entering, receipt, money leaving the trust account, disbursements. Now we move on to the general account. And there are two journal documents for the general account as well. Similar to the trust, you have the general receipt journal, general disbursements. Now in the general receipts journal, as you can clearly see in this template, we're focused on the date. Who did this come from? The amount and the method. That's it. Whereas in the disbursements journal is when you're looking at the method, you're looking at taxes playing a part in it as well. And again, as I said before, if you don't have taxes involved in a financial transaction, you would just show that as 0. And keep in mind, one important aspect of the general account is that you probably have, especially when it comes to disbursements, general disbursements journal typically would include money that you've spent on behalf of a client, but it could also be money that you spend on behalf of your business. There's two different purposes, and hence the reasoning behind a specific transaction within the general account is very, very critical so that you can easily bifurcate or demarcate between office-related expenses to disbursements that are more client-related expenses. And the reason why is because client-related expenses are recoverable, and hence you really need to take a tab on that make sure you can invoice them and recover that expense. Okay, so now you have a maximum of 4 documents when it comes to journals. So we go back to having 2 ledger documents and a maximum of 4 journal documents. That makes it a total of 6. I'm going to come to the reconciliation in a minute, but let's look at some of the other documents that are needed to be generated. The 7th document would be what's called as a fee book. Now the fee book is an interesting document because it pretty much captures, or should capture, all of the invoices that you've generated, including disbursements as part of those invoices, if any, because they are now a recoverable expense. So typically it's a expense, but also makes a part of the fee book because it's part of an invoice showing it as a revenue that's a recoverable. Okay, so every legal office has invoices. That's an important financial vehicle through which you're able to get your fees paid, whether you're getting it paid or recovering it from your trust account for eligible trust transfers. Invoices become very critical. And this fee book pretty much maintains based on important data elements right from the date, the invoice number, who was the client to whom you raised this invoice, in that particular invoice, how much of fees have you billed, how much of disbursements did it carry, and what is the total taxes involved that you've asked from your client, and the total billed. Okay. Again, if you're using a manual system, you can review it. We are recording this session for your convenience. You can replay this, take a tab of the important data columns that are needed for the storytelling around the fee book, around the ledgers, around the journals. Okay. And what are some of the other documents? So we've got 7 in total so far, and let's look at a few more. Now, if you are from the province of Ontario, or rather if you're doing business in the province of Ontario, and if you in your business have a way of transferring money electronically from the trust account into a general account, it's become a very, very common practice these days to be able to do that. Okay. The fact that you're not going to a financial institution and actually getting a deposit slip from a person. This is an electronic transfer, so you need to show proof of that transfer, and hence there's a form called the Form 9A, which pretty much asks you for all pertinent information about that transfer. So let's say you have a retainer, you've generated an invoice. So let's say there's a retainer for $1,000. You've done work and generated an invoice for $500. That is the eligible trust transfer that you have to move from the trust account into the general account to earn your money, because it's not your money when it's still in the trust account. For you to earn and move that money into the general account where you make your money, you have to use the invoice. And if you transfer that money electronically, so let's say you're banking with, let's say RBC for example, and if you're moving the money from the trust bank account into the general bank account electronically, online web, then you need to complement that transaction with the use of this Form 9A. It tells you the bank account information from the source, the bank account information of the target account, their purpose for it, and then you sign it. Other important documents that you should keep in mind, again, depending on the style of your business, are cash deposits where they need a receipt and a deposit slip. So there's 2 aspects to it. So if you're depositing and if you're accepting retainers or accepting payments in the form of cash, so there's no electronic way of tracking that transaction. And very important that when you deposit that cash into your bank account, that you request a deposit slip which says this is the amount, has all the pertinent details for you to showcase at the time of an audit. So we had 7 documents. At a minimum, you have a Form 9A depending on the jurisdiction. And you have the deposit slip, maybe even a duplicate cash receipt. And it's not so much a bookkeeping compliance document, but some of the verification documents could be verification of identity, making sure that it's truly you who's making that deposit. But leaving that verification document alone, at the minimum you have 2 ledgers, 4 journals, your fee book, and a deposit slip and Form 9A. Okay. And before we get into understanding how much of time you're utilizing to generate these documents, first let's internalize that these are the documents needed. Okay, so important aspect of it. Now the final document that you need on a monthly basis to generate is what's called as a reconciliation document. Again, similar to the ledger and journal, you will have a reconciliation for trust and a reconciliation for general. And the term reconciliation is so universal today, right? It's not specific to the legal industry alone. It's in fact very specific to the business industry because everyone is reconciling their business, some of them doing it on a daily basis, some of them doing it on a weekly, bi-weekly, monthly basis. The recommendation from the Law Society is that you do this at least once a month. And the reconciliation report allows you as well as the auditor to learn from that storytelling through that document about the nature and hygiene of the financial transactions that have entered and left that particular trust account or general account over that time period. An added element of the trust reconciliation report, importantly, is what's called as a client trust listing. So let's look at the trust reconciliation report that you see on the right-hand side for a moment. There are 4 important steps or 4 important data elements that are captured to tell the story through this trust reconciliation report. The first, or the step 1, that's really required is understanding, of course, because the reconciliation process, let's look at it before I get there, is a way for you to compare the financial information that you have captured for your own purpose. Let's call that bookkeeping. So let's say you have a system, maybe an Excel sheet, maybe a diary, maybe a legal accounting system. An accounting system could be any form that you're managing and writing this down. And then there's the truth behind these financial transactions when the money is entering and leaving your bank or your financial institution. The reconciliation process is to compare what you have recorded with what's been recorded in the bank. Okay? So we start at step 1 as that being the fundamental basis, which is tell us what is your balance on that particular date that you're looking to reconcile. So for you to reconcile, an important starting point is the date. So for the month of January, recommended that you do it 3 or 4 days prior to the end of the month, or at least before the end of the month. If you move to the next month of February, and that's fine too, you just have to ensure you're comfortable with the date range, and that's clearly listed on the document like here. As you can see, it says my trust bank reconciliation as of August 31st. So that's the basis. And then you start to document your bank balance as reported by your financial institution. And the bank balance is nothing but an accumulation of all the money that's entered into the trust account over a period of time. And all that money has come from really the retainers and, as I mentioned before, other forms of money that can typically enter into your trust account, mostly in trust. Okay? Now, there are a few possibilities of errors that may occur that are part and parcel of your legal business. And the reconciliation process is a phenomenal, I would say fantastic way for you to really capture those errors in a timely manner. The use cases for these anomalies, as I call them, can be either where money has not yet reflected in the bank, plus or minus, or money has not yet been reflected in your own bookkeeping system, plus or minus. So we'll call them either outstanding deposits or outstanding checks. And the third anomaly is something that you never wanted or never expected, but can happen, is that of a bank error. Sometimes you may be caught off guard if you're looking at these reconciliation at the last minute saying, why is that $10 off? Why is my bank statement showing $10 less than what I've accounted for in my bookkeeping record keeping here? That could possibly be because the bank withdrew $10 from your trust account when they ideally shouldn't have. So till you make that correction, so you have to go to the bank, request them to deposit that $10 back into your account, and then remove that $10 from your general account. Till that happens, you carry that bank error, because only through that bank error can you tell the story, the reason behind the difference between what your bank had to say on that date to what your bookkeeping system says. Okay, so first you're tracking the date when you're doing this. Next, you're recording the bank balance. So you log in into your online banking system or look at your bank statement, whatever, at the month end. Now you're looking for corrective measures between deposits, checks, and bank errors. And what are these deposits and checks? A classic case where a retainer has been provided to you and you've taken that check and you have not yet deposited that into the bank, which means your bookkeeping system, but you were very due diligent in writing down that retainer amount in your bookkeeping system, then your bookkeeping system is going to show an extra set of dollars compared to your bank. Likewise, if let's say you've given a trust disbursement for a court fee for $200, you right away accounted for it in your bookkeeping system, but that $200 had not yet been removed from your trust account. Maybe the check got lost in mail. Again, now you have two different reasons why it has not been accounted for. Vice versa, you've got that trust retainer, you run right away to the bank, you do the right thing as a business owner, you deposit it into your trust account. But then you forget to write it down in your bookkeeping system, and when you try to compare these two, the bank has more money than what you've accounted for. Of course, the latter part is easier to fix because it's your bookkeeping system. You should be able to go back and just backdate that transaction and write it down, which would ensure that now the numbers are matched. It's harder the first time around making changes at the bank level. Okay, but this reconciliation process, if done, let's say on the 25th, gives you an additional 3-4 days to make corrective measures before you can, I would say, ideally close the books or reconcile that particular month, let's say on the 30th. Okay, so that's why we typically talk about the 25th, because there's room for improvement over the next few days before the end of that month. Now this third step, which is very critical and a big differentiator between your trust reconciliation report and your general reconciliation report, and sometimes even asked as a separate document for your audits, is what's called as a client trust listing. So the client trust listing is nothing but an accumulation by file, by date, by customer, with the total amount in place for that particular customer. So let's say John provided you $1,000, Peter provided you $2,000, and Sandy provided $7,000. So when you add those three up, you should probably have $10,000. And that's the balance that should remain in your trust account. And that's the balance that the financial institution would show for. Let's say there's a fourth person, and let's call him Andy. Now, Andy gave you $1,000, so that makes it $11,000. But you moved $500 from trust into general because you paid yourself through an invoice. Then the remaining is $10,500. So the bank balance should show that, and the client's trust listing should show those 4 names with the last activity date. So when did you last work on that file ever? With the remaining balances of $1, $2, $7, and $500. And the accumulation of those 4 numbers is what gives you the $10,500. Likewise, you see in this particular case, there's $1,120 remaining in the Peter Piper client trust listing. There's $72 for whatever reason with Susan, and another $523. They add up to give you the actual bank balance of $1,715. Step 4 is really for you to showcase that what's shown in your bank balance matches with your own bookkeeping's trust ledger. Okay? So there are 4 steps or 4 data captures that are done, and that's all you have to remember when you're doing your reconciliation for the trust. Now, in the general reconciliation statement, the only difference is that you do not have step 3. There is no client trust listing, so you just have step 1, 2, and 4. Now, most of the legal firms, of course, ensure that they've done their trust reconciliation. But I wouldn't say that they're not doing the general reconciliation. Sometimes there's slightly lesser importance or urgency provided to general reconciliation. That's fair. But what we recommend, as someone who's been in this business for about 14 years now, is the general reconciliation provides you 2 pieces of information. One, it allows you to close your books and appreciate all the transactions that have entered and left your general account from an audit perspective, because sometimes it is asked during an audit. But the second reason, the more important reason, is so that you can clearly understand the profit and loss of your business, because the balance in your general account, or for you to appreciate and understand revenues coming in and expenses leaving that particular month, tells you the story of what the profit or loss for that particular month is as well. So if you can find an easier way for you to generate this reconciliation statement, it only takes some extra minutes to do that for your general account as well. And hence, we highly encourage going forward, if you aren't doing this already, kindly educate yourself, find ways that you can improve upon generating and delivering both the trust and the general reconciliation documents. Once reconciled, those 9 or 10 different documents that we discussed earlier, starting from ledgers, journals, etc., the numbers behind them are prudent, and you can be very certain of the quality of that data. You can be certain that this is exactly the amount of money that came in, this is exactly the amount of money that left, because you've now reconciled, compared it between statements, and you can confirm it. There's proof of it as well. All right, so I'm going to pause. I know I've taken the last 35 minutes of monologuing here. I'm just going to take a quick pause so that's a kind of a learning experience for me and for you, to see if you have any questions so far with regards to anything that we've discussed before I move into my next segment, which is really talking about knowing what you know in terms of what is expected from you, what are some of the opportunities for you to do a better job in delivering these documents in an efficient, faster manner. So let me take a minute. Please let me know if you have any questions, and then we'll go from there. I guess you can always use the chat window. I'll be curious to know if you're happy to share, if you complete your reconciliations on a monthly basis, or how often do you do your reconciliations. So feel free to share with the group what your reconciliation discipline looks like, if you're happy to share. Okay, I'll continue as I leave that question open-ended to you. Moving on to our next segment, really talking about how do you manage this, given all the other work that you have to do as a legal practitioner. How much of time do you spend this? Do you have help getting all of these documents done? Time and money are you spending towards this? We highlight now, of course, the need for a legal accounting system, as it was purpose-built to capture and captivate your each and every transactional input into a system and convert that into the appropriate financial numbers that are needed, and representing it in a templatized document is really the work of a legal accounting system, or ideally should be the work of that system. So if you as the legal practitioner, let's say you've not trained yourself to be fluent with the accounting needs, and all you're looking to focus is on your primary job of a legal practitioner, so you have options, of course, to use third-party help, which costs time and money. Sometimes your time is involved as well to validate these numbers, because many times what your third-party helper is doing math. They're doing the math for you and they're trying to find the anomalies, and they report the anomalies back to you, but it's you who's actually giving a definition. You're the one who's going to provide the reasoning and the fix many times for these anomalies. Okay? So if you're planning to use a system of record that's electronic, because it's getting cheaper due to pretty much the advent of cloud, you have far more options in the marketplace for you to explore, so you're not stuck with a single system of choice. And knowing that these systems can help reduce not only the output time, but sometimes also the amount of time that it takes to input data into a system. What we ask you is, what are you waiting for? And hence request you to take this initial month of January to do some R&D, to understand tools, maybe take some demos, understanding the needs of Law Society compliance, do a homework about the systems that can help you deliver those documents in a timely manner. And we'll leave you with these three important reasons or benefits that we believe a legal accounting software can offer you. A system that allows you to record information, because that's the starting point for any system. However sophisticated the system may be, someone has to enter the information into it, or that information needs to be captured by that system to begin with. Second is the fact that these are purpose-built systems, legal accounting, to help you reconcile your statements, both from a bank and comparing it with your own financial record keeping. And third, if you're a practitioner in the country of Canada, then compliance becomes a very critical component, where you are certainly going to be audited within a certain time range, and hence legal accounting systems can give you kind of a peace of mind to provide the compliant set of documents that you need to deliver when you're being asked for, as well as giving you that discipline to manage and maintain these documents so that you're now proactively ready for these audits whenever they happen. Okay? So with another 12 to 13 minutes remaining on my clock, I'll also quickly introduce you to uLaw for those who don't know who we are. We're a Canadian company based in Ottawa. We've been serving the legal practitioner industry for the past 14 years. And what we offer is a cloud-based platform to do legal accounting, business accounting, practice management in a very compliant manner. And I'm going to shift gears real quick from a presentation mode into a demo mode where I'm using uLaw just as an example to show you what you should expect, not only out of the system, but in general from what these reports should look like. And if you need more information about us or would like to take our system for a quick test drive, we offer it on a 30-day free trial. So please do visit us at ulawpractice.com or ulaw.io. Okay, so now I'm logged into our uLaw system. I've logged in as a fictitious practitioner, Roger Moore, someone who's very close to me, who's been with me for 12 plus years as a demo example. And for those who have attended my demos, can certainly appreciate Roger Moore. First and foremost, I'm going to walk you through in terms of the output documents, and then time provided, we'll look at some examples of how you can enter the data and how it enters the output system as well. If you look at pretty much any screen within the uLaw system, you have what's called as a compliance panel. And if you look at the Law Society's monthly compliance set of documents for financial management, you see right away the system kind of is purpose-built based out of the expectations written by the Law Society's bookkeeping guidelines. We started off with Ontario, or LSUC as it was called, and gradually moved towards all other provinces. And today we can, of course, say that we pretty much covered the needs of the bookkeeping needs of provinces across the country. And we'll first start with the reconciliation process. Or in fact, let me start the way I started the presentation. Let me show you the ledgers and journals. So I'm going to click on the client's trust ledger, and let me say I'm going to do it for the month of November of last year. You can do this over any date range. So there you go, right away. For the month of November, let's say you're being asked for it, saying, can you show me your trust ledger for the month of November? Here it is. But of course, it was generated on the day of my audit, for example. You can see this is customers across that date range with outstanding balances, starting with Mr. Daniel Craigson, who had $621 with the balance trust of $378. Now the storytelling, the data elements are pretty similar to what's expected in the bookkeeping compliance and the audit template that you're expected to provide. Okay, so you've got the client. In fact, we've got the matter, if you have multiple matters with the same client, and a file number for reference. You have Gregory Brown with another balance. Last but not the least, you can see Sarah Macbeth has a 0 trust balance because the $700 was what she provided the client or provided the legal firm, and over a period of the next few days, that $700 was moved through invoices from trust to general. So let's keep that example and keep that reminded of Sarah Macbeth of $700 coming in at 100, 500, and 100. And let's do the general ledger for that same date range. So I'm going to choose the month of November. And generate the general ledger for that month. When you can see this, and if you look at Sarah Macbeth, you can see there are 2 files, and we look at the second file of $700. Here's the other side of that story, which is really $500 and then $100 of $600 being moved from the trust to the general. that's coming into the general account. Okay. And you have balances for all of the other clients, including Daniel Craigson right at the top, 0 balance. Gregory Brown having a 542 balance. And you can even see that the 542, and this was the important aspect that we were talking about, there's a HST component to it, and hence the legal fee was $480 plus an expected $62 in HST, because this is a firm in Ontario. Okay, well, let's look at the client. We looked at journals. There were 4 different journal documents. Trust receipt, that's all the money coming in. And then there's a trust payments or disbursements. So we'll first look at the trust receipt. Use the same use case of November 2021. I could have done December too, but. And here are the 2 financial transactions in the month of November where money came into the trust account. There was a $700 retainer from Sarah Macbeth through a check. So that's the method, the added storytelling within a journal. And importantly, if you look at the purpose of the fund, it clearly tells you why was that $700 paid. It was through a retainer. And who paid for it, the source of funds, was Sarah Macbeth. If now Sarah's father or mother, brother paid for it, this would show their name, because the retainer is then made in their name. Okay? Then you have another retainer of $1,000 coming in from Gregory Adam, but in this case, this was an email transfer that was made. So it makes your life easier when you generate this document during the time of reconciliation to know where did the money come from, so that it's easy for you to backtrack or check the audit trail of where the money went. Let's look at our trust disbursements or payments. This is money leaving the trust account. Remember that trust transfer that we did in the month of November. So let's go back and looking at the month of November, and this is the trust payments or trust disbursements journal. There's quite a few. Starting from the 2nd of November all the way to the 15th, you have money leaving the trust account. We have the method. So it was a check that you had written out to the Ministry of Finance. And this was a trust disbursement, I'm thinking, and there it is. Yes, it is the case. That's the purpose of this money leaving. Specific for the Sarah was a Steffi matter, and this was the $100 that went straight from trust. And that is why your general ledger only accounts for $600. Now, when you look at all the 3 documents is when the story is complete. You had $700 coming in from Sarah. $100 went straight from trust as a disbursement towards a court fee. That left the trust balance at $600. And then there was an invoice generated to that $600, which was then moved from trust to general. Okay? And likewise, you can see there is another application fee paid for the Gregory versus Adam Ministry of Finance. And this is what a trust payments or disbursements journal looks like. With just another few more minutes, let me run through this. So likewise, you have your general receipts, so money coming in into the general account. And I'll generate the other document. That's the beauty of the cloud. parallel processing. First, for the general receipts journal, money coming into the general account. So you did that trust transfer, and hence money coming into the general account resulted in $100. For the same Sarah versus Steffi, you can see these both belong to the same invoice of 3384, and that was another $500, both using the same electronic fund transfer. So keep that in mind. So when the auditor sees that, then the next question is going to be, all right, can you show me your Form 9A? So you could be like, absolutely. Come in here, look at your Form 9A. Choose the date range being the month of November. Now, if you haven't done this already, you can generate the Form 9A for that entire month, because you keep a tab, and here's Sarah Medved's movement of money from the TD account from trust to general. It has the amount as well. Here's the amount of $600. You can see how the documents pretty much tell you a story, and that's what they're looking for. Because you're dealing with these numbers on a daily basis, you may already know the story. Maybe you're the director of this movie, you're the storyteller to begin with, but for the audience, the auditor who's really looking to review this movie or storytelling, they need these documents to fill the puzzle. Okay? Last but not the least, with another 2 minutes left, I'll do the trust reconciliation. And as I mentioned before, the trust reconciliation is looking at all the financial transactions recorded in your own bookkeeping system. So let's assume uLaw is your system. You've mentioned all these numbers, and you compare it with your financial bank. And if I were to look and see what I've done with December, I can change the date. You can clearly see I only have 2 transactions now that are unreconciled. I can capture the bank balance. And start to compare between the transactions that have been recorded here with what the bank has to say. This is where you have 2 screens, or you have a printout in your hand, and tell us if exactly this retainer that was deposited reflected in the bank on the 3rd, or maybe it was on the 6th. So maybe you recorded on the 3rd, but it also actually got deposited only on the 6th. Likewise, you say it's the 9th, but maybe Larry's retainer did not get deposited till the 10th. But now these $2,000 deposits have been accounted for. Automatically you see the reconciliation button, so that now you can generate that templatized trust reconciliation report. Same thing with general. Let me choose the month of December. Now, thankfully I've reconciled the general account. There's not much to reconcile. I'm just going to wait for the trust reconciliation document to load, but in the meantime I'll generate that final document. The fee book. And I'll generate that for the month of November as well. So essentially you've got these documents readily available for you to download, and because they're automated, they're able to take the actual date range that you need it for, and based on the information that we've already captured, are able to tell you exactly what this particular fee book looks like. So you've got by date, by client, by invoice number, the amount of fees generated, the amount of taxes involved in that as well. Okay? And the last document for the day, the trust reconciliation document. you can see the bank balance. There were no errors or payments or deposits that were outstanding. But step 3, which is critical, is the client's trust listing document. So how come there's $512,000 in your trust account? Is because of all these little droplets of money that's still in balance, right from Toby McGuire's $789 all the way towards Larry Gregory's $1,000 that we just accounted for. Okay? Again, keep in mind the important set of documents from reconciliation to ledgers to journals that are needed as part of your bookkeeping compliance to your fee book and 9As if you're in the province of Ontario. And this particular webinar is recorded. Once again, the title for the webinar is Law Society Bookkeeping Compliance, credited for 1 hour of professionalism CPD credits. We hope that you are able to take away from this webinar the need to reconcile both trust in general and hopefully appreciate the set of documents and the storytelling that those documents tell your auditor about how you manage your finances for both trust and general. I'm going to quickly pause for any questions that you may have, and of course, thank you once again for participating and being in our webinar today. Thank you. And you can use the chat window to ask any questions that you may have regarding the webinar. No, thank you. It was my pleasure. I think there's a quick question about our website. So it's either info.ulaw.io or ulawpractice.com. They're both going to the same place. And the particular site is called info.ulawpractice.com. And if you need to register yourself, and again, we don't bother you as much. We just send you emails about webinars that are forthcoming. Or if you don't want those emails to bother you, you can just come to this particular site and have a look at this. Yes, today's webinar was accredited for 1 hour of professionalism credits, and I'm going to stop my recording as well.